Right.
Hello friends, this is PhillipCapital India and I'm going to share the weekly technical commodities outlook for the period 22nd of July to 26th of July 2024. Last week we have seen that gold has slipped down from the highs of around 74,000 plus levels to end at its lows at 73,000 mark. So broadly we can see on the charts that the counter is within a consolidation zone and the broader consolidation range is between 70,000 and 75,000, which has started from almost April 2024 till date. The, the broader outlook remains range to up, and within that range, it's should be looked for buy on dips. So for the current week, we believe that the counter has a tug of war level at around 72,000 mark. So any kind of dips towards that level can provide again a risk reward ratio better in favor of bulls, where one can look for ratio spreads. And on the higher end, 74,750 remains the first important hurdle. Once that has been taken off, it can be open for the higher levels of 75,900 in weeks to come. So buy on dip and sell on rise remains the outlook for the short-term time frame basis, but overall positional outlook remains buy on dip. Same is the case with silver. Last week it ended in red, sub 90,000 mark. But this consolation is there after a sharp up move from the lows of around 68,000 to the highs of almost 97,000 mark. So time and price correction is part and parcel of any market. We are witnessing some kind of time and price consolidation after both gold and silver has entered into an overbought zone. This consolidation basically will strengthen up the major impulsive structure of this counter. Silver for the coming week is expected to remain still within a range, and 88,000 will be looked as a silver line between bulls and bears. Initial dips towards 88,000 mark can be looked for buying, expecting a pullback once again towards 95,000 and high levels. So broadly, both gold and silver remains buy on dip on positional time frame, but on a short-term time frame, they are witnessing a consolidation zone within a range where once again one can look for buy on dips towards the support levels. If we talk about crude, it's within a triangular pattern and it's perfectly playing as per the structure. Since last few weeks, we have been mentioning that 7150, 7200 mark is important cluster hurdle. Trading below that, the bias will be slightly range to down. But at the same time, the structure is higher highs and higher lows pattern. So dips towards 6500 and 6000 mark can provide once again a favorable risk reward ratio for swing long trades. So for the coming week, once again dips towards 6500 mark and thereafter lower 6200 can provide a better risk reward ratio once again for going long. But overall, the upside looks capped till the time it is trading below 7200 mark. Once 7200 is taken off, then the counter will be open towards higher highs targets of 7800 to 8000 mark. So initially, for the coming week, 6500 will be looked as an important tug of war level between bulls and bears with buy on dip outlook, keeping strict stop losses. If we talk about copper, we have seen initially in March, May mid, the counter has slipped down from the highs of 940. It tested the lows of 840, which was mentioned support. From those levels, we witnessed a pullback. And that pullback has once again encountered with profit taking from the highs of 880 odd levels. And last week, it ended in deep red at 820 odd levels. So technically, the pressure will be there in copper with sell on rise outlook. For the coming week, we believe that any pullback can be looked for trading short opportunities, expecting copper to test the lows of 780 in weeks to come. That's an important level on a short-term time frame basis. And 860 will be looked as an important hurdle for the coming week, below which the bias will remain sell on rise. That's all from my end. If you find our content relevant, you can contact us on the given mail ID and contact details for our momentum trading ideas in gold, silver, crude oil, and copper on a short-term and mid-term time frame. We recommend strategies, naked trades, momentum ideas based on technical and derivative studies in MCX. So you can reach us on the given contact details for our future reports, trading ideas, and strategies. Thank you very much.